Dow component Intel just out with some strong earnings, also announcing Apple will acquire the majority of its smartphone modem business. Ed Snyder from Charter Equity Research joins us now for some reaction. Ed, with a pretty nice pop here for Intel, up 6%. I guess it had been an underperformer. What drove the better results?
Well, primarily the declines in some of its core business weren't as bad as expected, but most importantly, their PC business continues to do fairly well. They've released a bunch of new products on their 10-nanometer process, and they're starting to ship, and you're seeing it show up in better revenue and better margins, so that helped out quite a bit too.
What's your take on the Apple-Intel sale? Is it a good price for Intel?
Well, yeah, it's smart. Yeah, it's a very good price for Intel, given they weren't going to be able to make much with that division if they weren't in smartphones. So they had this huge group of engineers that was costing them quite a bit and dragging margins. And if you're not in smartphones, you don't have the volume to pay for that. Getting Apple to buy into this and letting Apple use it for smartphones while Intel uses that modem product for stuff that's core to them, like laptops and routers, is a smart move because it takes a lot of the cost off their books but still gives them access to a 5G modem.
John Fort also joins us. Our reporter who covers the stock is going to talk to the CEO, Bob Swan, tomorrow. John, on Squawk Alley, what's the key question around these earnings and this deal?
Well, I think the question around the earnings is the lowered expectations and then the raise. I mean, in the text around this earnings announcement, Bob Swan saying it was the strength in the data economy, both on the client side for PCs and on the data center side, that really drove this outperformance. Now, they raised their full year guide by $1 billion. They've been telling this data story for a long time. So what exactly was it that they saw that caused the quarter to outperform that much? And then as far as the Apple transaction goes, Sarah, I mean, I think we're maybe prone to underplay this a bit because there were rumblings that this was happening. We've been talking about it for a couple of days. But this is the most important investment, the most important M&A deal of the Tim Cook era at Apple. This is 2,200 employees, along with intellectual property. It is one of the most key components in Apple's most key product, and there are all kinds of possibilities on the integrations that Apple can do on this going forward now that they've got this in-house. Apple's always been this grand experiment in technology, particularly consumer technology, when it comes to vertical integration, and this raises the stakes on that to a level we haven't seen before with Apple, guys.
Yeah, so I guess the question, Ed, off Intel, I mean, it's up 11% this year. It is one of the worst performing chip stocks. Does it get re-rated on this news? How do you value?
Yeah, I think people are going to look at that. It depends on the conference call comments and some of the color we get out of CEO and CFO on more of the details of the trends. But, yeah, you were in a down cycle starting in the beginning of last year. You saw this with TI a couple days ago where things were coming off the bottom of the cycle, and they were not predicting, but suggesting that they're probably going to see a rebound. So a lot of folks trying to anticipate the bottom of the cycle, but it looks from these results and others we've seen, we're reaching that. And so I think you will get some re-ratings.
Ed Snyder, John Fort, thank you both.